Hey traders, Nick Sheen here, answering a couple of requests from members on a few tickers, one of which is Trulia. I don't track it fundamentally, and I know the industry it has been violent as far as price action is concerned the last couple of days. I noticed Zillow is up another almost 4% today, and Trulia is up almost 3% today on the heels of big up day. So this is truly 12 months daily. So every candle is 1 day. So looking at the last two candles, massive candles, right? It's not as massive as this one. So needless to say, it is a momentum stock that whipsaw up and down. Fundamentally, I can't comment. It looks like right now it reverted to the regression line, that blue line right there, which is the best fit line with given all these data points. So it's coming at it from the bottom end. Sometimes it pierces it up, other times it just reverts down. This is kind of an anomaly. Obviously, there was a mispricing there, but if you wanted to ignore all of these, you can draw a line to fit the best fitted here. So it is on an uptrend. And as far as volume is decent. Again, these spikes kind of skew the average, but this is a moving 10-day, so it is higher than the usual. So these two moves can be listened to because they are on decent volumes, not like they're frothy. As far as risk reward, I sell spreads, and candles like these will whack me out. They're too much danger for spread, and without the reward. So there is the risk of candles like these without the reward, meaning the premiums I get paid in order to open a trade is small in compared to the danger it presents. So, like I would have to go out to December, and even then I won't find enough premium for me to convince me to get into the trade one way or another. So I'd rather not play it at all. However, if I'm in it, and technically I can't, there's nothing really obvious other than markets like it seem after this correction here that was pretty heinous, but all of this and this anomaly there can cancel each other out. So cooler heads will prevail in the long term. This is how I would put it in plain simple English. There's also the chance of it getting taken out. So let me zoom out to a different slice of time, which is, this is truly again 12 months, only each candle is a weekly candle. So this is 1 week, this is 1 week, and this one is 1 week, but it's all a 1 day because it's just today. So this week is starting out on a good note on the heels of a decent week last week. Again, cooler heads will prevail. Ignore this, ignore the deeps, and it should be on its way up longer term. But I cannot trade it using credit spreads. It's just too violent. Now, that doesn't mean I can't trade it at all. I can either buy the stock and forget about it if I'm bullish, or if I'm bullish, I can buy a call spread or calls out in time to prove me right. So if I think it's going to have another couple candles like these, I can buy a call spread, and if it does, this call spread will will increase in price. Therefore, I can sell it for more than I bought it, hence the profit. Premiums are low, so even though it's violent, but it's kind of weird to come up with the right premium, so be careful when you place limit orders to be favor yourself with the trade, and then tone it down to see if you need to in order to get it filled. Don't leave it up to market orders. I think you'll get killed on that one. So if you want to go long it, call spreads, that's how I would do it. I would not do credit put spreads in that one. Conversely, if you want to short it, I would not do it shorting calls. I would do it buying put spreads. Although, after two big candles like that, you'd think it's going to take a breather or not. So let me see if I can see anything from the options market. If I say this week, which is a monthly, nothing to be spoken of. So no, nothing there for me. So that was Trulia. Another name that somebody mentioned was LinkedIn, I believe. Was it? Yes, even though I covered it already, I'll run it through real quickly. Today it had bad news. Obviously down almost 5%, but that's not unusual for LinkedIn. Look how violent the stock is. Big candles everywhere, big long trends everywhere. So over the year, like nothing happened. Fell off a cliff, worked so hard to recover, fell off another mini cliff, worked so hard to recover. So okay, higher lows, pretty bullish, right? But if you zoom out 2 years worth of work erased in a small period of time. It got up to here. I think it was close to. I was shorted at 300, and I was scared, and then it got all erased, and now we are back. So let's zoom back in on 1 year. I showed you this because this is where it started from. So as crazy as this level seems, it's not that crazy. It needs just a couple of massive headlines and it'll be down here in no time. I'm not forecasting that. I'm just saying it is a possibility. Don't ever assume that this is, whoa, way too low, it's not going to come back here again. It was here 6 months ago. So today's news is Facebook could be coming into it, launching some sort of a work division of your personal page on Facebook. So having a billion users would be idiots not to listen to that as a threat to LinkedIn, which makes its money from business context. So what if Facebook can offer something similar to LinkedIn? It doesn't have to be exactly alike. People are saying, oh, it's not a problem. Facebook's not going to spend money developing software. It's like, it's nothing. They already have the engineers on staff. It'll be nothing, in my opinion. I'm an engineer myself, and I just cannot see this barrier for entry technology-wise for Facebook. I think it's a ridiculous comment to make. All it needs is just a couple of buttons here and a couple of clicks there, and ways for you to start networking on a professional level as opposed to a personal level. Just like the personal level, I think it's an easy switch, and I think if that's true, more downside in LinkedIn. I could not go along it right now, not even via debit call spread. I think I'd be wasting my money, especially that it's failed at a high before this headline came out. After exuberance on earnings and then it almost immediately gave it up, it hasn't filled this gap. It touched it, but it didn't fill it. So I want to see if 235 is next or 205 is next. I vote for 205. That's me. So if I was to throw away money on a lotto ticket, I'd probably buy puts in this one. But again, this is not an investable thesis. This is just a lotto trade that could pay out for small money. So that's my LinkedIn update. SBUX, I am long SBUX via a leftover lotto trade, but it looks like it's going to expire worthless. I was long it via an 80 call, but that was like a remnants of another trade. So it was a small lotto trade that obviously I did not pick it right. I like the company. I like it long term, but you can't argue with this red line that I drew here, and I'll zoom out to see why I drew it because it starts earlier. But it looks like, it failed right here twice, once, twice, right? Failed through it, tried to come up to it, failed again, failed before he even got to it, failed when it got to it and tried to fight it, poked over it right here. This is a telling candle right there. One candle and then let's just revert. Boom. So best case scenario is if I connect these two recent highs, pokes is here. So I need to see it first get over this hump, second get over this hump, the extension of that, and then talk about higher prices. Until then, I'm more bearish than bullish, especially given this wedge that just showed up. Yes, higher lows knocking on roof, but it came so fast. And the markets are stretched. So it's market dependent. If the market continues to rally, it has a chance to rally. So I just zoomed out to an extra year, and now we're looking at 2 years worth of data here. And this is the red line that I drew. And you can see that this area has been kryptonite. So this area being anything over 79. And so I think Starbucks needs to prove to me that it can perform above this area. Until then, I'm not committing longs to Starbucks. I would commit maybe a lot of put to it, and maybe even credit call spreads if I can get enough. That's interesting. Now I'm looking for it for myself. Thank you, member, for reminding me to look at Starbucks. Maybe a credit call spread to finance some puts, but on a tight leash, meaning if it goes against me, I close it at a loss. I don't care. But if it doesn't go against me, it's a real winner, because then I'm in the put position almost free, because I'm going to pay for it by doing a credit call spread. Just ideas, not recommendations, just education on how one can benefit on one trade by paying for it using another. It creates risk. I'm short the stock if it runs through 80, but which is risk. But the reward is pretty big, because A, I can keep the premium, and B, I can benefit on the debit spreads here, if indeed I'm correct that price is falling. So so far there's not a lot of premium unless I go out straight out to December, and I don't know exactly when it reports next. This 1 year, it just reported, so I've got a couple months to work with. So I'm comfortable enough going to December with that, especially if I'm bearish the markets, but the premiums are still pretty low, so not worth doing the credit call spread. Just pay for the debit spread on the put side. Take a bearish position if you want to. I can't commit longs to this one either right now. That's my statement on that. UNG, boy, I'm so hesitant to talk about UNG. I don't know anything about, I don't think anybody knows anything about energy these days, especially natural gas. Because it's kind of a, what do you call it? Well-organized market, I call it, so not to call it rigged. Breakout over this blue pattern, probably fulfilled the target or close enough to it, and now we're going back down. I don't know enough about it. Technically, it could be bullish because it bounced off of the drop on top of the high, the trend high, the blue line that you see up here going down. So yes, it could have higher dollar prices coming up here, and if I look to last year, yes, this period is somewhat bullish. Same about time in December is bullish. Maybe we got a cold weather that the effect here going on, I'm not sure. So this whole period is bullish. I don't know if it's seasonal or not, so let me see if I can zoom out 2 years. Is that something that happens? Yeah, it could happen. November, this is December 2 years ago. Maybe not. Maybe December. It happened in January a couple years ago. So, you know, hit and miss. Looks like nothing, no seasonal pattern that I can discern. But I do see, you know, habits of going up, slicing down, consolidating. So slicing down, consolidating, going up, down, consolidating, up, consolidating, down, consolidated, and now it could be going back up. So lotto ticket up, yeah, I'm not too upset with that. I take some calls in it as a lotto. Not a fundamental trade. I don't track it fundamentally. That's up to you if you track it fundamentally. Let me see here. Okay, these are the names that came in on the request, I do believe. Someone said lockup period expiring in Baba. Anyone knows what about it? I'm not too worried about Baba. Somebody was worried about Alibaba. Lockup period, kind of like GoPro style. Speaking of GoPro, worth a look-see. Somebody else selling, and aftermarket, oh my gosh. Aftermarket, they're down about 1% last time I checked. Okay, so GoPro, I cannot buy it up here. I thought these guys are crazy. They're selling it as a social media or actually media company. I was like, what? It's a camera company. Well, maybe it can. Well, yeah, so can Nike. But will they? I don't know. Show me first that they're going to do something like that. It's a camera company. And bye, 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 bye. Everybody to no end. A nice J-hook run up here. But since then, it's just sliding down. Today showed some upside potential, but then immediately got chopped by some selling aftermarket by the owners. It's kind of like the owner saying, hey, thank you guys for loving our stock price, and then just to thank you, we're going to screw you right here by selling a whole bunch of our stock. So this is bearish. It's flagging. And it's flagging, okay, I read it on a descending trend, because even though this is an ascending trend, so if you consider this being a flagpole right there of sorts, yes, but now it's squeezing. It needs to make a move. I know it failed here. I know it failed here. It has to prove to me that it can bounce. So the next question, is it 87.5 first or 70 or 67.5 first? So I'm willing to wait to see what it does right here, and if it comes back to here first, then I'll be more likely to say 70 or 67.5 first. So if it gets here first, it's going to break down. If it gets here first, it may recover the highs, and then another question comes up: can it break to all-time highs after the 97.50? So as of right now, I'd be willing to bet on puts rather than calls myself. And as a matter of fact, I could probably, no, I wouldn't, not even with your money. Just kidding. Credit call spreads, enticing, but I would stay away from it, especially with 13F season not done yet. Somebody's going to come out and say, oh, we're long GoPro to no end. And then you get a Carl Icahn saying, this is the next Netflix. And bam, you're wiped. So I'd be willing to play it with debit spreads. So if I'm bearish, I'll buy puts or put spreads. Two thoughts: you can buy close to the money, and then you wouldn't have to guess how far down it's going to go. You just need to guess down or up. Or go low and buy cheap and hope for a big whoosh down, and then the reward will be big, but lower chance of it working out because you have to guess direction and magnitude, how far down and in which way, and how far up and in which way, right? So if you're bullish, buy calls or call spreads. You can go cheap, buy them up here, out in time, and hope that it goes up. Or if you're you don't mind investing a few bucks, then you buy them right here. So this way, all you have to guess that yes, it's going up. You don't have to guess by how much because it's immediately going to pay you. Two rules of thought there. So that's GoPro. Those are just quick names. 15 minutes, real quick, to cover about a handful of stock. Keep them coming, those requests.